Hi guys, 2 minutes and we'll start, all right? So let's wait everybody to join and we'll start the session. If you can hear me, please put yes in the chat so I'll know. Okay, great, thank you. Guys, those of you are joining now, just are waiting for 2 minutes before we start. And those of you want to ask, please send the question to everyone, right? Do not send it only to me. Please send it to everyone in the chat so everyone can read it, right? If you have any questions. Guys, if you want, those of you who have like the camera on, you can turn it off just for your privacy if you would like. Right, so in the chat, we have basically one question, Ismail. Hi, T and Alan, great introduction session. I have some, by the way, guys, some of you are new here. Those who don't know me, I'm Alan. You know me from YouTube basically, and most of you know T from Sunday sessions, yeah? So Ismail is asking in the chat, hi Alan, great introduction session. I have some doubt on first session. Ability invented every impulse has another impulse after opposite direction of correction provided there should not be of reversal waves. Okay, how to anticipate the reversal or whatever to trade or not? Right, Ismail, regarding your A question, this once we finish basically the today's session regarding the market structures and patterns, you will have good understanding regarding that. And regarding whether to trade, right, guys? So this is the last thing you have to basically think about, if you know what I mean, right? Because get in the trade is so easy, it's just a click, right? So knowing how to trade will be coming after, you know, basically the market structure and everything basically where you in the bigger picture, right? So once you finish all these steps, guys, one by one, you will have a good understanding about market structures, about pattern. Once you finish risk management, money management, psychology, which is very important, and you learn our strategy, you will have very good understanding where to put the trade, like where to enter, where to exit, where to put stop loss, all these stuff, all right? Can we trade on correction also? Yes, you can trade on correction. Like I said, these two questions is related to how to trade or like related to strategy entries. I will cover these on this session, all right? On the strategy class. Make sense, Ismail? So now focus on the topics, guys, one by one, because if you rush things, you'll be lost, basically. Make sense, Ismail? Right. So those of you who watched the recording of this introduction, guys, any question regarding this one? Great. Any question, guys, regarding what was covered in this session? If not, so we can start today's session straight away. People are still joining, by the way. Okay. Please, next time, guys, join at 7 p.m., right? Because this way, basically, we will start the session to not waste time. No question at the moment. Thank you. Okay, perfect, guys. Let's get started then. So in today's class, we'll explain regarding market structures and regarding patterns. Okay, so if we go to just a blank chart, because this is how I usually explain things. And then after that, we go to examples. All right. I search about data and Elliott waves, and that makes sense. Elliott confused. Basically, Elliott is not confused. You need basically just to focus on the methodology, on what he is trying to explain. And then after that, once I explain you the data inside this session, you will get a good idea regarding what he is trying to explain, right? If you think like it's confusing, if you start to read about it, basically the book needs around probably 4 to 5 days to finish it. If you want to read it, BC Nafi. So take your time, read it more than once, and then you will definitely understand something. Hi, Alan, I found your time frame is showing 1 hour, but I did not find an hour in Sunday session. Can you please explain the logic behind it? Ismail, regarding Sunday sessions and Wednesday sessions, and also Saturday sessions, these are covered on 4 hours because we tend to give the only the bias. But regarding the wave analysis, it's top-down analysis. We'll explain this in a moment, all right? So we do not only look for 4 hours. 4 hours is just to show the bias that we are looking for the next week or the next coming few weeks, okay? So let's get started, guys. And after we finish this session, if we have time, we take questions. If not, you watch the recording tomorrow. Can we have a book link regarding Elliott wave that? Naveed, I'll try to send this probably tomorrow. I will ask Joe Basic to send you this along with the recording of today's session, right? Regarding the link of Elliott wave principle. Okay, Naveed, do you have any tip on how to spot a complex market? This is not basically a complex market. Once you see something complex, it's best basically to avoid trading it. Okay, so let me guys start. And then once we finish this one, if we have time, like I said, we take questions. If not, you watch the recording tomorrow. It will be sent to your email at 7 p.m. tomorrow, even before, if basically the admin team finishes before that. It will send to your email, and then along with the book, Elliott wave principle PDF. I'll make sure Joe will send you also the book. And then after that, we take question on the next session. All right. So again, market structure. What is market structure basically? Like we were discussing yesterday, regarding the charts, all right? So these are basically the reality, like these are the orders, everything will be plotted on the charts. So like we said, all the participants will be basically orders and trades or whatever they are doing or they are planning to do is plotted here. Why I'm saying they are planning to do? Because as example, if we see markets going in this direction, like this one slowly, we knew that the next wave from here, we knew that the next wave will be to the upside. Why is that? Because we understand that market makers are planning to move market up in this down wave. All right. So what is market structure basically? On the chart, you will see only 3 variations. Either you will have an uptrend, or you will have sideways move, or you will have a downtrend. These are the only 3 scenarios inside a chart. Okay. Now, inside this one, we have a lot to cover, basically. What is an uptrend? For those who don't know, an uptrend will start from a starting point. Let's call it 0.0 or whatever, the starting point. We will have an up wave. We'll have a pullback or a corrective structure, another up wave, corrective structure, up, correction, up, correction, up. Now, we call this a low, this a high, this is higher low, higher high, and so on and so forth, right? So it's a series of higher highs and higher lows. This is an uptrend. Now, if we need to focus on structures, guys, if I just need to take this to here, all right? From here to here, at this point of the time, we have only an up wave or like an up move, all right? This up move, it will be usually a fast move. So we call this one an impulsive wave. Now, impulsive wave, characteristic of an impulsive wave, it will be in the direction of the trend, first of all. Second of all, will be basically sharp and fast. So now, guys, once you are the recording, I want all of you to take notes. Now, focus on the session, and later on, tomorrow, once you are the recording, take notes. This is how our course is basically structured in a way like you need to listen to it and take notes in order to understand. Why we do that? Because we force you to write the notes. And this way you will understand the concept better. And whatever, like you write something, your mind will memorize it faster. All right. So this up wave, usually it will be an impulsive move. Impulse is usually a move in the direction of the trend. Okay. So if you are expecting market to go up, this up wave is an impulsive move. Characteristics of this impulsive move, it should be sharp and fast. Make sense? This is first thing first. Impulsive wave is a sharp and fast move. How you can see basically if it's a sharp move or fast move, you need to focus, guys, on time factor as well as the price factor. Most traders, they focus on this one, on the price, and they ignore the time. This also what Elliot basically, guys, never mentioned about or he didn't discover. And that's why we will discuss here in today's session. So if this first impulse base is sharp and fast, after that, you'll expect market to give you a corrective structure. As you can see, every time I draw a corrective structure, I draw it in this way. Why in this way? Because corrective structure, it should be basically slow and massy. Means like this should take more time than the impulsive wave. All right. So coming back to what we discussed before, for this impulse, you will get another impulse. Everything in between is called a correction. So the characteristic of an impulsive wave, it should be sharp and fast. Characteristics of a corrective wave, it should be slow and massy. Now, the rule regarding this one, or the guideline, this corrective structure, usually it should take more time than the impulsive wave. Make sense? Once you understand this part, guys, and you focus on this part, everything will change. So if you see move, guys, excuse me for the lot of drawings, but once we explain this in details, you will understand the structures better, all right? So once you see market going to the upside like this, and after that, you see market going sharply downside up again, this is not a corrective structure. Corrective structure, it should be slow and massy, and then another up wave, all right? So these are rules and guidelines. Impulsive wave, I'm repeating this, impulsive wave should be sharp and fast. Corrective structure, it should be slow and massy. At this point of the time, if you focus with me here, are we in an uptrend or are we in a downtrend? The answer here regarding this one, we are not in a trending mode. So we are not in an uptrend until or unless this wave will go up to break this top, and we are not making here a new low. In other means, we have here a high, we have a higher low, and we have a higher high. Once you have the higher high, this is your confirmation that you are in an uptrend. Before this higher high, you are not in an uptrend here. So if we go to this point, if you will not go up to break this top here, you are not in an uptrend. Make sense? Let me just clear everything. You have this impulsive wave, you have this corrective structure, and then once this wave will be going up to break this top, this is where you have an uptrend. Why this is important, Alan? Because if you will not understand when you are in a trending mode and when you are not in a trending mode, you might take wrong trades. Okay, guys? Coming back to here. This is an impulsive wave, characteristic, sharp, and fast. If you look at the time factor, this impulsive wave starting from here till here, I'm just making basically as some sort of horizontal line to the downside just to show you the time factor of the impulsive wave and the time factor of the corrective wave starting from here to here. Okay, guys? You will see that this time and this time are not the same. And the time of the corrective structure is basically bigger than the time of the impulsive structure. I'm not talking about the price, guys, here. I'm talking about the time factor. And this is very, very important discovery and very, very important thing to focus on, because Once you understand this theory, guys, everything will change. I'll give you examples in the chart, but just I'm explaining you now the theory here. So impulse, correction, impulse, correction, impulse. This is an uptrend. Make sense? Now, once you get this impulsive wave, the corrective structure, guys, like I said, it should take more time as a guideline. And as discussed on the first session, impulsive wave, it can be 1, 3, or 5 waves. You remember that? Now, corrective structure, it cannot be 1 wave. So corrective structures, guys, are minimum 3 waves to us. This is a rule. So impulsive wave, it can be 1 wave. It will be better if it's 1 wave. Corrective structures are minimum 3 waves. Okay, guys? Why this should be minimum 3 waves? Because once we understand like corrective structures are messy and they take more time than the impulsive wave, this is one of our rules, guys, that change everything to us. So impulsive wave, you need to write these rules also later on. Impulsive wave, it can be 1, 3, or 5 waves. I'm talking about this, guys, inside this one, yeah? So if this is 5 wave structure here, this impulsive wave, or if it's basically only 1 wave, just sharp move to the upside, or even if this is 3 waves, for us, this is an impulsive wave. So the characteristics of an impulsive wave is not the number of waves, that it should be 5 waves. It's basically the look of it, which means like if it's sharp, like 3 waves, it can also be sharp as 3 waves. Make sense? So it's not like it should contain 3 waves or like it should be subdivided into 5 waves here. The impulsive wave, we look at it from the time perspective. Okay, so it should be sharp and fast. Now, corrective structure, it should take more time than the impulsive wave behind it, and then it should be minimum 3 waves. All right, guys? Make sense till now? Before I continue to the next thing that I need to discuss. Let me see just the chat. Is that, guys, clear for now? Before I go to the next, yes. Okay, perfect. Because, guys, this is very, very important. So for this up move, you will get a corrective structure, another up, correction up, correction up. Here we are covering, guys, the uptrend. Why we are combining, guys, uptrend with why we are not only discussing this pattern, which is like L wave structure. This is not what you will see so often on the charts. Okay, this is amazing regarding the theory. This is amazing regarding the topic. Again, guys, I'm not criticizing because wave analysis is based on this. All right, so we are just explaining you guys what is the difference and how you can improve to trade correctly the next wave. Make sense? So in this one, like I said, this is a low, this is a high. What we do here, we take, guys, the lowest point with wicks. Like if you have a wick here, we consider the wick as the lowest point. And also the highest point here, we take it with the wick. So if you have a candle here like this, and you have a wick here, we consider the wicks. And in any structure, we consider the wicks. So our high regarding this impulse is here, inside this one, and our low is here. Okay? Now, once you get this up wave and you start to get a corrective structure to the downside, you will still within this range from the low of this impulse to the high of this impulse. You will still within this range until or unless you break the low or you break the top. If we will not make a new low and then we will make a new high, this is where we consider we are in an uptrend. Make sense? How this will help us, we'll explain this in detail step by step. But just for you to understand, we are not an uptrend until or unless we break this high, the highest point of this impulsive wave. No matter what you call it, if you call it 1, if you call it A, if you call it W, whatever label you call it. We'll not go into labeling because this is not important. I want you to focus on the structures at the moment. All right, guys? So after you get this impulsive wave, this will be the start of an uptrend. And this uptrend will start at the end of a previous downtrend. We'll go into detail step by step, but just focus on this topic at the moment. Now, if you get here a higher low, and then you get here a higher high, this corrective structure, it will be going down and it should not break this low. If this happens, we are still within the uptrend. If we get this up wave, the market will respect the trend and we are going to push higher and break tops again. Same thing here. Make sense? Now, in the uptrend, the impulsive waves are in the direction of the trend, which means this is an impulsive move, this is an impulsive move, and this is an impulsive move. All right, guys? Everything in the middle, if I change the color, everything in the middle is the corrective structure. Everything in the middle is the corrective structure. This is a correction. Now, where most people will be confused is, are we going to have 3 waves, or are we going to have only 5 waves, or this can be more than that? This can be more than that. This uptrend will still remain an uptrend until you get a downtrend. Make sense? And this downtrend, it can be just another corrective structure for another push up. So if here you will not get a corrective structure for another drop, you are not in a confirmed downtrend to the downside. Make sense, guys, all of you? So this downtrend, it's here a downtrend, but you should not go for a sell as example. I'll just touch base on this one. You should not go for this sell unless you get a confirmed trend here to the downside. And this one, this is a low. We'll just explain this in a moment regarding downtrend. But this here a low, this is lower high, and this is lower low. Lower high, lower low, which means uptrend is a series of higher highs and higher lows. Downtrend is a series of lower lows and lower highs. Make sense, guys? This an uptrend, this is a downtrend. What we look to consider basically the points, or like the pivot points, whatever you need to call it, about the market structure, we consider the wicks. So if I'm looking at this one, we look at the highest wick here, the lowest wick here, the highest point here, the lowest point here, and so on and so forth, for us to see if we're in an uptrend or we're in a downtrend. All right, guys, make sense regarding that before we continue to the next topic? I have heard our mentor T saying faster corrective. What? Yeah, exactly. We'll cover this one piece enough in a moment. So guys, exactly, because understanding market structure, understanding uptrend and downtrend will make a lot of sense. Like it will help you a lot, because some traders, they don't know, like this is not an uptrend here. This is just up move correction. So this is a high, this is a higher low at the moment. And until or unless you get this up wave to break this up, you are not in an uptrend. Now, should we take this buy or not? This is a different story. Focus on the market structure. Example, if we go to any of these charts. And this one as example, as you can see, this here is an uptrend, all right? You have this up correction, series of higher highs, higher lows. Here in this one, this is basically what? What do you have here in this point? Because impulse and are based on time, what time frame is best to use? Johnson, this is a very good question. Wave analysis, guys, is a top-down analysis. Any structure, any methodology you learn, it should be a top-down analysis. And because of the fractal nature of the market, you need to go from yearly all the way down to the lowest time frame that we use at the moment is the 1 hour. So once we analyze the charts, we go from yearly, where you can see the yearly chart. You can go to the fxtop.com. And then you can go for the historical rates to check basically the yearly charts of an asset. The website is called fxtop.com. All right. You start from there. And then after that, guys, you start to go to TradingView, you go to the monthly, weekly, daily, 4 hour, and 1 hour. Okay, guys? Make sense? So wave analysis is top-down analysis. As example, if this is basically an uptrend on the daily chart, here you will see basically an uptrend on the 4 hour chart, and this also an uptrend on the 1 hour chart. This means, or this is the fractal nature of the market. Okay, fractal nature of the market is not only regarding the trends, it's regarding the waves, which means if you have basically up correction up in a daily chart, this one, it will be subdivided into smaller waves here and smaller waves here, and also this one, which means you will have waves within waves within waves. All right, guys. So if you have like this up, correction, up, correction, up, if this is a complete structure in the 1 hour, this is just one wave in the 4 hours. you will get a correction, another push up, correction, another push up. If this is a completed wave in the 4 hours, you will get a correction up, correction up. This is just a one wave in the daily. Make sense, guys? So this basically the fractal nature of the market. Make sense, all of you? So Johnson, regarding the time frame, wave analysis is top-down analysis, which means you start from the yearly all the way down to the 1 hour. We do not go under 1 hour at the moment, because if you go under 1 hour, you will get a lot of noise. Okay, so the lower time frame, like the lowest you go in the time frame, the high probability chance you will get a loss, because there is a lot of noise in lower time frames. You have to focus on the bigger picture. Exactly, 100%. Are you using any fibs? Mohammed, yes, we are using fibs, but this related to the strategy class. Focus just on the structure, guys, on the market structure at the moment. Now, like I said, you will see only uptrend, sideways move, or a downtrend. Okay, usually the sideways move, guys, will be inside of the corrective structure. And this here, we have some sort of pattern that we'll explain in a moment. So all of you now, we hope like you get the point regarding an uptrend and regarding a downtrend. Downtrend is basically the same thing, but in inverse. Then correction, you will not be in a downtrend, or you will not have a confirmed downtrend until you break this low. Once you get this down wave, you are in a downtrend. Make sense? Now, those of you are asking, all right, Alan, should I wait this one to go for the trade? Do not think about the trade at the moment. We'll cover this one in the strategy class. Focus on the structure and focus on the topic. So for us, this is the impulse here. This is the correction, and this is the impulse. The impulse should be sharp and fast. Corrective structure, it should take more time than the impulse usually. Remember, it should take more time than the previous impulse and not the next one. So the corrective structure has nothing to do in relationship to the next impulse. It's only in relation to the previous impulse. Make sense? So you have this up wave, correction. This corrective structure, it should take more time as a guideline than this impulsive wave and not this one. Because this one, it can go slowly to the upside, then give you a corrective structure and then push up. Make sense? And this will be hindsight, by the way. So your focus should be, at this point of the time, you will never know what will happen next, but you knew what's happening here or what happened here. Make sense, guys, all of you? So the corrective structure, you have to compare it in relationship to the previous impulse, not the next one. This is in regards to the uptrend. In regards to the downtrend, is the same thing. So the corrective structure, you need to compare it in relationship to the previous impulse, which is this one. Characteristics, this should be fast and sharp. This should be slow and massy. Impulsive waves, they can be 1, 3, or 5 waves. Corrective structures, they are minimum 3 waves, which means if you see this down wave up and then down, this is a pullback. It's not a corrective structure. And this regarding the fast correction or like a pullback. Okay. Pullbacks, if you see this sharp up and sharp down, this is not a corrective structure. All right, guys. So if you see market like going sharp down, sharp up, sharp down, and this one, you will not see 3 waves. You'll see 1 wave and then a down move. This is a pullback. Usually it's better to avoid trading the pullback, because if you have fast down, fast up, most likely, or like you have high probability chance to get a correction, another push up to break the top, which means like if you take this trade, you might get a loss. So coming back to here, corrective structures, I'm repeating this again, they are slow and massy. Like this one, it's taking more time than the impulsive wave. Once you understand this, yes, once you understand this theory, guys, regarding the time factor, which was not covered in Elliott waves, right? Once you understand the time factor, everything will change. Example straight away on the charts before we go to the next topic. Any wave you, or like any chart you name. Guys, put like any chart you name so we can go to check it without me like picking any chart like randomly. Put any chart you need to go and then we can cover it. Gold, let's go for gold straight away. So in this one as example, right? Look at this. From here to here, this was basically the high. So once you need to look, guys, at the chart, yeah? Look at these points. High, low, high, low, this one, this one, right? So first of all, my eyes pick these points straight away. And this is what you should do as well. And remember, you start from the highest time frame. So you go from the yearly, monthly, weekly, daily, 4 hour, 1 hour. Okay. And this one is like it went all the way up to make all-time high. Okay. So if you need to just see this wave from here to here, you've got this impulsive wave, you've got this corrective structure, you've got this impulse, you've got this corrective structure, and you've got this as an ending structure. I'll cover this in a moment. After that, you've got this impulsive wave. Can all of you see this as a sharp and fast move to the upside? Yes or no? From here to here, from this lowest point to this high. Can you see this one sharp and fast, guys? Perfect. Now, after this up wave, what we've got? We've got this sharp down, correction, down, and this up, which means here, from here to here, this is our impulse. After that, we've got this corrective structure from here to here, and then up wave. Now, why aren't you set from here to here and not from here to this point? Because as we just mentioned, corrective structures are minimum 3 waves. And as you can see, this is the up move. This was basically a flat. I'll explain the flats in a moment. And then this up wave. So you have a high, higher low, and then higher high here. Make sense? As you can see, this is an impulsive wave, this is a corrective structure, and this an impulsive wave. This correction took more time from here to here, basically, took more time than this impulsive wave. Can all of you see that before I give you more examples? Great. Now, regarding the fractal nature of the market, for this up wave, we've got this up wave, right? For this drop, or for this impulsive move to the downside, we've got a correction here, which also took time more than this impulsive wave, and then this down move. So this is the fractal nature of the market. This corrective structure took more time than this wave, right? Remember, this is inside the correction. So from here to here, this is your corrective wave. This corrective wave from this point to this point is subdivided into 3 waves. And inside these 3 waves, you have impulse, correction, impulse, and then up again. Make sense? Now, if you go to this part, just to give you more examples, if I go to the daily, look at this here, that what we covered on the first session. If you go to 4 hours also, so you can see it clearly. Look at this one. So for this up move, we've got a corrective structure here, as you can see, down, correction down, and then another up wave. Can all of you see that? So impulsive wave, it should be sharp and fast. Corrective waves, they are minimum 3 waves. Why I'm saying minimum? Because we have flats, we have complex structures, we have triangles, which means minimum 3 waves. It can be 3 waves, or it can be 5 waves, or even more. Make sense, guys? So as example, once I cover the patterns, you will understand the point. So this is an impulsive move. This is a corrective structure, and this an impulsive move. Should we take a trade here? No. Why? Because this is not a 3-wave structure to us. So you have this down, correction, down, and then we look for buy setups to go for this trade as example. So can all of you see the structures, guys, like up, correction, 3 waves, up. And then after that, we've got this drop. We break this low. Now, for you to focus on the fractal nature of the market, I want you to focus on this part to see that this correction took more time than this impulse. If you will count if you will see the structure of it. Now, this impulse, you've got this yellow corrective structure. This impulse, it took less time than the corrective structure, and then the next impulse. Now, if I change the color to green as example, this impulsive wave, it was sharp. Look at this from here to here. For this price action from here to here, it took around this time. And then this corrective structure, which was basically less in terms of price, but big in terms of time. So you need to focus, guys, on the price and the time. This is much important than this in terms of analysis. Make sense? So what I'm trying to say here, I'm trying to show you the fractal nature of the market. So for this up, we've got this up. For this down here, we've got this down. For this down here, we've got this down wave. And we broke this low. which means like the structure is completed basically. Can you see that, guys? So this corrective structure took more time than this impulse, and this corrective structure here took more time than this impulse. Another way, you will get up, correction, up. So for this drop, you will get this drop. And for this up wave, you will get this up wave. This is the fractal nature of the market, guys. This is the fractal nature of the market. All your job basically, it should be to focus on the next impulse. So you do the analysis and you focus on the next impulse. Once you understand this pattern, once you understand this explanation, along with the market structure, along with the uptrend, downtrend, and once I explain the liquidity and the moment, everything will start to be clear in front of you. Amazing question, Muhammad. Market will break tops and bottoms to take liquidity. All right. So once you get this downtrend here, as example, like this corrective structure, under this low, you will have liquidity. Market makers target these liquidity pools, right? This liquidity is basically stop losses of all these traders or participants. They went for this small uptrend to the upside. And this is why once you see corrective structures going slowly to the upside, make sure that market makers are building liquidity here, and then they will take it. So they will drop the market to take liquidity here, and the market will go to the next liquidity zone again. Make sense? So if you have this up wave here, you have liquidity here. So this means the next up move will be to the upside to take liquidity. And then if this is a low, you have liquidity here, and so on and so forth. Guys, if that started to be clear for you, before I jump to the next topic. Perfect. So wave analysis is top-down analysis. Our pattern is for every move up, you will get another move up. Everything in between is called correction. This is an uptrend. This is a downtrend. Impulsive waves, you know the characteristics. Corrective structure, you know the characteristics. All right. Now, like I said, impulse should be sharp and fast. Correction should be basically slow and massive. Minimum for corrective structure, we should see 3 waves minimum. All right, guys. Yes, I'm following. Perfect, guys. Great. Now, Alan, if this is the start of an uptrend from here to here, and let's say we have identified that this is an impulsive move. What if from here we've got a corrective structure, small one, another push up? This will be your impulse now. Small correction, another push up. This will be your impulse. The starting point will not change, but this highest point, it can change. It can change like impulsive wave, it can get extended. So until you get basically this corrective structure, you will not basically, or you cannot consider that this is your impulse. So in other means, like if you get this up wave, and then you will say, this is my impulse, and then you get a small corrective structure, one push up, correction, push up, and then down wave, you cannot say that this is my impulse, all right? Especially if you get a small corrective structure here. Make sense? So in this way, your impulse starting from here, it will start from the same point, but this up wave, it can extend to be, as example here, in this example, and not here. This is also very, very important to understand the pivot points, guys, and to understand the price action and to understand the trends. Make sense? This is very important. So let's say you have identified that this is our impulse to the upside. You can see it in front of you, like it's not like something too hard to identify. Impulse wave to the upside, impulsive move. This is sharp and fast. And then let's say you have here a whatever, like starting point 0, and you have a high. What regarding this corrective structure, and how many variations we have here? This is what we'll cover here inside the patterns now. Okay, guys. So once you identify the first impulse as fast and sharp move, and you start to get a corrective structure, inside this corrective structure, this can come into a lot of forms. Like I said, I'm repeating this over and over again because this is very important, because this will reduce your losing trades. How? Because if you see market as example later on, went up sharp, then you will not take this trade. You wait market to correct, then and then you go for buy setups here. That's why I'm always repeating 3-wave structure. The corrective structure, it should be 3 waves to give you higher probability chance move. Make sense? Now, what inside this corrective structure? This corrective structure, guys, it can came into more than one form. Pattern is a form. Okay. Sir, what is the cause of impulsive wave? If market makers create this impulse move, if yes, then why they do that? Carthen, the reason behind impulsive move is basically market makers, they are in the market. So whenever you see an impulsive move, it's not retail traders move, this is market makers move. Why do they do that? First of all, in order to take liquidity from previous trend. And then second of all, if they are trying here to move the market to previous liquidity zone and bigger picture, and then after that, they need to trap retail traders into sells, build liquidity here, and then push up. Make sense? So why do they do that? To take liquidity and to get in the market, and after that, make money. How do we know the impulsive or corrective wave has finished? This is a good question. So once you get this up move from here to here, okay, this is an uptrend. You have higher high, higher lows, higher high, higher lows, and basically lower time frames. If this is a daily one, once you start to get here low, lower high, lower low, this means this up wave from here to here, you can consider it as finished. So once you have a downtrend here in lower time frames, or like in lower degree, because we call this degrees, guys. Yeah. So regarding the fractal nature of the market and the degrees, once you read the book, you'll understand what I'm talking about. As example, this is an impulsive move. This wave, whatever we call it, like 1A or W, like I said, regarding labeling, I will not focus into this one because this will be confusing for you. If this is an impulsive move from here to here, this can be subdivided into 3, 1, or 5 waves, like we said. These waves inside this one are waves in a lower degree than this purple one. You get what I mean? So up, correction up, lower degree means like smaller waves. So this is up, correction up, this is a high, higher low, higher high. This impulse, this corrective structure, and this impulse, they are smaller than the purple one. And this is where we get like the fractal nature of the market and the degrees. Now, once you get a downtrend after this up move, this where you can say this impulse base is finished. Now we have this starting point, this high, and then we are starting a corrective structure. Make sense? Good question. Later we'll learn how exactly. Thanks for the answer, sir. Is there any way for market makers to see the amount of liquidity in market? Carthen, I do not suggest you to go into that far, if you know what I mean, because for them, they 100% can see the liquidity pool. So they don't see your order. They can see basically where pool means like huge orders are sitting at this top as example, or at this low. Make sense? Their job basically is to trap retail traders to be in the buy or in the sell. And then after that, they take them out. And just guys, to focus on this point, it's not only because of that. Yeah. So remember, participants in the market are not only market makers. Okay, guys, just to be clear on that. So as example, your door can push up because of political pressure or because of, as example, the war, uncertainty. You get what I mean? So it's not only regarding market makers thingy. How can I see that the market is doing a corrective structure and not yet started the downtrend? Right. Once you get this up move, the corrective structure, it should be against the impulse, which means like this move is against this impulse. And then after that, you get this up move. So this is a very good question. If you have an impulsive up, the corrective structure, it should be downwards and then up again. We have something called running flat. I'll cover in a moment, but just to give you a guideline, corrective structure should be against the impulse. All right. Let me give you a few examples, guys, before we jump to the next topic. Maybe this will be clearer or like more clear to you. If I give you just a few examples inside the chart regarding impulsive waves and corrective waves, I think things will be more clear. Look at this example here. We've got this high, right? We've got this trap. we've got this corrective structure and then this drop. Can you see this one, guys, regarding on what I was explaining? Can all use this structure, sharp down, correction, and down? Also inside this one from here to here, look at this. We've got this drop, we've got three-wave structure to the upside, and then this drop. Corrective structure, this drop. Correction, this drop. Can you see that, guys, from here to here? So this down wave from here to here is your impulse. This is subdivided into 5 waves, if you can see it here. In 4 hours, you will see it better. And then after that, you've got this up, correction, up, another corrective structure here, and then up move. This is 5 waves corrective structure. I'll cover this in a moment again. And then you've got this drop. I want you guys to focus on the market structure. Is that clear? And Naveed, we always use candlestick, right? Because this will identify for you, or it will show you more the high and the low, because you'll understand where you can see liquidity or where is the liquidity is sitting. In candlestick patterns better than the line chart. But if you jump to the line chart, you can definitely see the structures as well. Let me just give you an example. So in this one, you can also see it like down, correction, down. So wave analysis, guys, works on every single asset you know, Forex, commodities, whatever, because it's simply the mass psychology of, simply basically understanding the mass psychology of all market participants. I'm repeating that, all market participants. Can we say how long time a correction compared to the impulse is? Is it needed to know? And Nico, just as long as it take more time than the impulse, it will be validated as a corrective structure. And usually it should be 3 waves, minimum. Make sense, Nico? Right. Like I said, guys, once you watch the recording, you write down the, perfect. You write down the questions and we answer it in the next session. Now, if I need to jump to the next topic that I was covering here, because it's very important. Once you identify like this is an impulsive move, all right? And market will start give you a corrective structure. Like I said, this corrective structure will be basically coming in term, like this one, it can come into a form. Because it's 3-wave structure, it will be into a form. And this form, we call it as pattern, okay? So impulsive wave, just to focus on it as it should be fast and sharp. And corrective structure, you must focus on the patterns, guys. And the patterns are really, really, really important. Why is that? Once you understand when the corrective structure is about to finish, you can go for the next move. So your critical point is to understand that this corrective structure is about to finish in order to go for this up wave. And this one is not as simple as like, this is a downtrend. If I have high, like corrective structure, this way, like, this is where it's finished. No, it's not. And this one, you need to understand what pattern market is forming in order to use to go for the next high probability chance trade. So what I'll cover now, guys, I'll cover the flats. And the way we see the flats is different. So because I said corrective structures, they are minimum 3 waves, we'll start with the flats. So the flats, remember, it's flats, not flags. The flag is this, we do not trade flag. The flat is different. The flat is a corrective structure. And the flats are 3 waves corrective structure. We have 4 variations of flats. And the flats, they will come like as a corrective structure, which means starting from here to here, this can be any sort of these flats. And then after that, we've got the next up wave. What I cover here, I'll cover this part, the corrective structure, once it comes in form of flat, okay? So let's say you have this up wave. And then you would get this impulse to the downside, you will get a corrective structure, and you will get another down move. After that, you will get this impulse. Now, as most of you can see here, you have this as impulsive wave, and this also as an impulsive wave. All right? Now, this impulse is related to this corrective structure. And this is why I wanted to start to focus again on the fractal nature of the market. This impulse from here to here is not related to this impulse. All right? So I'll mark this as green. And the best thing to do, once you identify your impulsive wave, fix it, which means like this is fixed. And whatever is happening here, I'll try to understand what's happening next. All right? So a rule here regarding the corrective structure. Every corrective structure will start with an impulse against the previous one. In this case, against the green one. Okay, so every corrective structure starts with an impulse against the previous impulse. I'm talking about this one, guys, all right? Make sense? So this corrective structure from here to here, this one from this point to this point is a regular flat. We call this one a regular flat. What is the characteristics of this one? Regular flat, you get this impulse. It will not go down to break this low. You will get a corrective structure that will not go up to break this top, the high here in this case, the highest point of this impulse. So this correction, it should not go up to break this high. And you will have this impulsive move. It will go down to break this low and then up again. Under this low, the regular flat, we consider it as completed. Make sense? So this is the form of it. Like this. You will have a low, you will have here lower high, and you will have lower low. Make sense, guys? So this regular flat will be in a trending mode against this impulse, but it will stay within the range of this impulse. Make sense? The price range of the start of this green impulse to the end of this green impulse. Then you get this drop impulsively, corrective structure. Why this should be corrective? Because this is the fractal nature of the market again. After this correction, this corrective structure upwards, it should not go up to break the high of this green impulse. And then this drop, it should go down to break this low and then up again. This is what we call it as a regular flat. It will be in this form. So I'm just making this two lines for you to show you the direction of it. The points that you should focus on is this one, and this one. So this is the bigger picture, up, correction, up. This corrective structure here came into a form of a regular flat. This corrective structure is subdivided into 3 waves. And these 3 waves, it's a flat. We call it as a regular flat. Again, characteristics, you have a low correction that will not break this top, down wave to break this low, and then up again. Make sense, guys, regarding regular flat? FX boss, we have a lot, but you have to focus only on few. Exactly regarding regular flat, because I explain you the logic behind it, basically. On which time frame do we need to see 3 waves corrective structure? Because a 3-wave structure on 1 hour is not a 3-wave on 4 hours. Which, Jordi, like I said, it's top-down analysis, which means like if you see if this an impulsive move in the 1 hour, this should be a 3 waves in the 1 hour chart. So this you will not see it at 3 waves in the 4 hour chart. So let me explain you guys the logic behind this regular flat. Once you get this up wave, and then you start to get this impulse. Why we've got this impulse? We have liquidity under these lows. Because this year, if you want to see it in lower time frames, it's an uptrend, right? In lower time frames, which means under the uptrend, like under these higher lows, you have liquidity. Market makers will drop market down. And then after that, they will try to trap retail traders in this up move, because this will be a small or like a slow uptrend in lower time frames. Most of retail traders, they will get in here. Market makers are building liquidity under these lows and eventually here. What will happen? They will push market down again. They will take liquidity under these lows. And then after that, they will continue with this move, because this initial move is the market maker's move. It's not retail traders' move. So their bias, their direction is towards the upside. Make sense? Correction, up, correction, up. Same thing here. This is what they do, so on and so forth. So for us, this is called a regular flat. So instead of you going for this buy setup, you will go for this buy setup here. This will give you higher probability chance move to the upside. Make sense, guys? The logic behind this regular flat. And the best case will be if you have here something like this. Which means double bottoms. In this one, you have a lot of liquidity. And I explained this more than once on YouTube, if you remember, regarding equal lows and equal highs. This double bottom is a chart pattern most of retail traders, they love, because after that market will start to push up. They tend to go for this buy, and there's a lot of stop losses under this low. All right, guys, make sense? All of you? Right. So this is the first corrective pattern, corrective structure, regular flat. Now, this is the most powerful one, by the way. Okay. So you focus on this one. You try to find these patterns inside your chart. You will understand the structure better. If you go to any chart, you will see regular flats, by the way, any time frame, any chart. You'll basically, you will be able to see the regular flats. As example, look at this here. You've got this up wave. You've got this down, correction there. This is a regular flat. We've got this up move again. If you go to lower time frames, you will see the same thing in lower time frames. 4 hours as example. Look at this. And this one, if you go to this chart, right, and you start to see market going to the downside from here to here, you get this up, correction up. This is a three-wave structure. You've got this drop. Make sense, guys? Even in lower time frames, you will see the flats. Now, if you zoom out, look at this, how you'll see it in lower time frames. Remember, this was covered in bigger time frame. Look at this one. You will have this impulse, you will have this corrective structure, and you'll have this impulse. Now, look at this. You have this impulsive wave. This is sharp, this corrective structure. It took more time than this impulsive wave, and then the next up move. Can all of you start to see this? Look at this up wave, corrective structure, another push up, and so on and so forth. Also, if you zoom in here, this was a regular flat, and then up again. If you go to the 1 hour, you will see this is going like this, up, then correction down, and then up again, which means here we've got this first impulse to the upside. We've got this drop, correction, drop, and then up. We never broke this low, and then we've got all the way up to break this top. Make sense, guys, all of you? Can we know 100%? You will understand basically if PC nothing. Once you see market gives you this up wave, and you know, like this might be the start of the next structure, you get this drop, correction, drop. At this point of the time, you will have high probability chance that market will push up again to break this top at least. Make sense? So once you see this here breaking this low, you can start to understand that market will push higher, especially if this is sharp and this is slow. Make sense? Guys, make sense, all of you? So it's your job, guys, to go to the charts and try to identify them. Because once you start to see them, you cannot unsee. Make sense? So once you start to see the charts, once you start to see the flats, this will be something really interesting to know. As example, look at this here, right? We've got, this was the highest point. We took liquidity above these highs. We've got this impulsive wave, up, correction up, regular flat, and then the drop. So focus with me on this point here, this point, and then all the way down. This was like down. For every move down, you'll get another move down. Anything in between is called a correction. This corrective structure, it came into a form of regular flat that we just explained. Make sense, guys, all of you? Make sense before we go to the next pattern? Again, we are focusing on the structures and the patterns at the moment. Yes, perfect, sure. So please name on which direction our stop loss money goes. For example, if I'm placing buy trade, the moment if my stop loss get hit, the last money goes into sell direction. Carthen, which means like if you are going into this buy, your order here, or like your stop loss, is a sell. Make sense? And this why market makers, as example, this why market will go down to take you out and then up again, because you are tagged in the sell. So always they go against your order usually. Okay, right. So the next pattern, again, we are fixing this impulse here. All right. Now let's say this is another impulse for another structure or another starting of another trend. You will get this impulsive move. You will get this corrective structure, you will get this drop, and then you will get this up move. What is this structure? Remember, if it's a regular flat, this drop will be going all the way down to break this low. But in this case, at this point of the time, this will start to look as a regular flat up till here, and then you will get an impulsive wave that will not break this low, and then an up move. This is the flat, guys, here. It came into a form of like three-wave structure. This is the flat. After that, you get this up move. What we call this corrective structure, this is called contracting flat. I'm repeating this again. Every corrective structure starts with an impulse. So this is an impulsive wave. It's against this green one. You will fix this one. You have like starting point, we call it 0. You have a high, you have this drop, fast, corrective structure, another drop. So your corrective structure starts here and it ends here in this scenario. All right, so this is the corrective structure from here to here. And this came into a form of a contracting flat. Contracting flat is a three-wave structure. Characteristics, I just explained you. You have this drop, you have this drop will not go down to break this low. All right, you have this corrective structure that will go up to not break this high. You've got this sharp down move and then up again. This contracting flat, guys, we do not trade it usually. It's very important for you to know it as analysis, but usually we do not trade it. Why is that? Because contracting flat, usually it can tend to like, it can extend to be a regular flat. So if you will get in this trade to the upside, you will get a loss, and you cannot confirm that this is a contracting flat until you get this up move to break this top. Make sense? So until you get this up move to break this top, you cannot confirm that this is a contracting flat. Okay, guys? So this is the second variation of the flats. So now you know the regular, you know the contracting. Again, regular is the most powerful one, or like the one we focus on to trade. And I explained you why, because usually we have liquidity. And once you follow the liquidity, you follow the trend, you follow the market structure, you understand the fractal nature of the market, you will have good understanding where the market might go next. Make sense, guys? Example regarding contracting flat, we can go for any chart and we can see any of them as a contraction. Contracting flat will look like this. And then drop in a downtrend like this. And an uptrend will look like this. Why I'm drawing these guys in the same colors for you to understand, like here we are coming from a high and here we are coming from a low, which means like this is the initial move of market makers. And this here to the upside is the initial move of the market makers, which means they are biased here to the downside. They are biased to the upside, which means I should be biased with them to the upside to go with them, because you cannot trade against them. They have like more power eventually. And you go for the next move to the downside. You go for the next move here to the upside. Is that clear, guys, regarding this one? Great. Now, regarding the examples, look at this. We've got this drop, we've got this up move, we've got this corrective structure, we've got this up move. This is the sort of contracting flat before we go to the next down wave. All right, guys? So you have this up, correction, up, and then drop. This is the form of it in a downtrend. And you go for any other charts, you will find plenty of them. Okay, guys? You go to any other chart, you will find plenty. Just as an example, this might be one of them. Then up, correction, up, and then down. All right, guys? So once you start to understand the structure, you start to understand the fractal nature of the market, you will know basically where the market might be going next. We've got this drop, we've got this contracting flat here. I don't know if you can see it, guys, here in this one. This contracting flat, and then this drop. Up, correction, up, and then down. You cannot confirm that this is a contracting flat until you break this low. That's why we try to avoid it, but it's very important for you to understand, like in terms of analysis, because this will help you a lot to probably take the next trade, which means here to the upside. after you get a confirmed uptrend. If you get a correction, up again. Make sense? I'll go into this one in details in the strategy session, but just again, focus on the patterns and on the structures. Clear? Clear, guys, for all of you regarding the regular flat and regarding the contracting flat. Count correction wave as 3 waves, or can be more? It can be more, Johnson. Like I said, it's minimum 3 waves. So it can be 5 waves or even more as a complex structure. Perfect. Now the third variation, we have the running flat. Let me just put it for you. We call it a running flat. How the running flat will look like? You will get this first impulse as usual. Every single corrective structure. Basically, guys, we have 13. We will not cover all of them. We have 13 corrective structures. And then if you focus only on the one that we show you here, this will be more than enough for now. So you've got this impulsive wave. All of them, they start the same thing, impulsive move to the downside. You need to understand this impulsive wave basically is the start of it. If this will be impulsive wave up again, it's a pullback. We do not trade it usually. So until or unless we see a 3 waves corrective structure, we cannot confirm that this is a corrective move. Now, regarding running flat, like we said, this is fixed. From here to here is fixed. You get here a corrective structure to the upside, and this correction in this time, it will break this top. So if this is basically here 0 or like starting point, whatever, this is a high, you will get this impulsive move. You will get a corrective wave to the upside here that will go up to break this structure. It will go up to break previous high and not the starting point. Okay. After that, you will get a drop here. And then after that, an up move. The corrective structure in this scenario is this one. Guys, from the name of it, running flat. Okay. They are in rush to go to the upside. Okay. So they are running the orders. All right. So you get this drop to the downside, you get a corrective structure. You get this corrective structure will go up to break this top or the high, the highest point of the impulsive wave of this. After that, you get this drop that will not go down to break this low because it's a running flat, and then up again. All right, guys, this is what's called running flat. So your structure is this. If I change the color just to show you the fractionation of the market, the structure is this: up, correction, up. This corrective structure, it came into a form of running flat, and the running flat is a 3 waves corrective structure. As you can see, this corrective structure took more time than this impulsive wave. So your structure is not this. This is why basically retail traders get confused. Your corrective structure, guys, is not, or like your structure, your uptrend is not this. Make sense? It's not this. Because they don't understand how market moves. They don't understand market structure. They do not understand patterns. They do not understand wave analysis. That's why, guys, they get losses. For you now, you know that the structure is not this one. The structure is this one here. Why this important? Because this will help you a lot to go with the higher probability chance trades, and do not go for trades that you will get losses more than wins. Make sense, guys? Make sense, all of you, before I show you examples. Great. So this is the running flat. This is the third variation of the flats. Flats are corrective structures. Flats are different than flags. But do we trade these ones? FX box, trading running flats is also dangerous. Okay, so regular flats are so powerful to trade. Contracting flats, try to avoid them. Running flats, also you can trade them. They are less probable than the regular flats to get a win. What if third wave also break the low? Navid, are you referring to this wave here to break this low? Please put yes if that's the case. Right. Okay, guys, let me show you examples, and then we go to the next one. All right, Navid, the next one, if we break the low, it's the fourth variation. I'll explain in a moment. Now, regarding running flats, like I said, In a downtrend, you'll see market going down, sharp up, correction, sharp up, and then this drop. Okay? This is the running flat. Guys, I don't know if you can annotate, but try to check this here. Try to see if you can find any running flat, anything similar to this one before I start to draw it for you. If you can see a running flat, just type yes. If you can see a running flat anywhere here inside this one, because in just literally 1 minute, I'll try to draw it. Great. Yes, yes, great. So this is one here. All right, we've got this drop, we've got this up move, correction, up, and then drop. So for this drop, we've got this up, you get this corrective structure that will break this one, up move, and then down. This in a downtrend. Remember, anything happens, guys, for a downtrend, it happened for the uptrend. Same thing. Okay. So in this case, we've got this drop, just to zoom in here. If you get this drop, and then you get this sharp up all the way as a corrective structure downside. We broke this low, up, we did not break this top, and then down. All right, guys? Remember, in a downtrend, you will find the running flat like this. Pay attention, guys, to the internals. By the way, those who are advanced Elliott wavers, do not focus on the internals of waves, which means like, do not focus on how many waves each impulse should have. Focus on the characteristics. This way you will have the shift in your trading career. Once you focus on the characteristics as like fast, sharp, slow, and massy, and forget about 335, 355, whatever. It's written in the books. I'm just referring to those who are advanced Elliott wavers. Okay. So once you focus on the characteristics, everything will start to make sense. Okay. Because again, I'm repeating, this is the reality, nothing else. Right. So this is a downtrend example, and this will be the example of an uptrend. I want you again, guys, once you get the recording tomorrow, watch it more than once, write notes, try to draw the running flats, try to find them in the charts, take screenshots, and put them in any Google Sheet, all right, or any Google Word. Make sense, guys? So this is an example of running flat in a downtrend. Focus on this one. It should be impulsive. This one should be corrective. That will break this low. This one should be impulsive. That will not break this top and this drop. Again, this is an example in front of you. All right, guys? Another example here. This is another example. We've got this drop. We've got this up, corrective structure, up, and then the drop. Why I'm mentioning this as a corrective structure? Again, fractal nature of the market. So for this drop, we've got this drop. For this up, we've got this up. For this drop, we've got this drop. This is a corrective structure. So this correction is for this correction. And then this was basically the corrective structure of the running flat or inside the running flat. Okay, guys? Fractal nature of the market. Waves within waves within waves. Looks complex. Step by step, you will get it. Once we clear everything regarding the topics and we combine everything on the strategy class, you will start to get it. Muhammad, entering, trades, execution will be covered on the strategy class. Please, guys, focus on the topic. Make sense? Guys, all of you? Guys, I can give you the entry, but giving you the entry straight away without knowing where to execute that, it will not make any sense. Trust me on that. Remember, our job is to give you the knowledge and share with you what we know, right? But if you focus only on the executing the trades right now to make money tomorrow, this will not work. I guarantee you that. And you will understand this once you get the psychology class and once we cover the money management and risk management. It's not a get rich quick scheme, guys, right? You will be able to make money. You can work basically to make consistent profits. But the first thing to do is to stop losing money. And after that, you start to make money. If you focus only on the last thing, go step by step, all right? Again, all the tips that you can hear from us is just, it's just like for you. Please go step by step. I am following nicely, right? Muhammad, yes. Okay, guys, exactly, guys, before we go to the fourth variation regarding the flats. we know, guys, we know that this is why a lot of traders basically lose money. You are here to learn how to trade correctly and to not lose money anymore and start making money, right? But if it's easy, like if it were easy, you know, like it's not easy. It will become easy only and only after you learn how to trade correctly. And this is what you are doing at the moment. So running flat may break low for liquidity. Can running flat may break low for liquidity? I did not get your question, Ismail. What do you mean by that? Like this is the running flat. What do you mean breaking low for liquidity? I didn't get the question, to be honest. Anyway, let's cover the fourth one, guys, and then we go for the next one. The fourth flat, that is also very powerful, okay? We call it expanding flat. So now you know the regular flat, you know the contracting flat, you know the running flat, and we still have only the expanding flat. Again, once you read the book, or if you have knowledge with Elliott waves, they do not focus on the time factor. Once you combine patterns, weighted waves methodology with the time factor, everything will be like clear in front of your eyes. Okay, so right, we'll check that after we finish this expanding flat thing. So once you get this up move to the upside, right, again, you will get this trap, all flats, every single corrective structure, all will start with the same thing, impulse against the previous one. So if you are defining this as an impulse, this is the, let me just go with the green. This is the high, and then you start to get this drop, okay? Now, in terms of how far this can go to the downside, guys, this can go 50% of this impulse as example. It can go 61%. It can go all the way down to 1 pip. Let me repeat that. This one can go all the way down 1 pip above this one, and it will still be valid. As long as market will not print a new low, you will still in a potential uptrend scenario. Make sense? So do not consider this as dropping just as example 10% of this wave. Let it drop like 50%, 40%, between like 40 to 60% of this impulse to consider this as the first impulse of a corrective structure. Make sense? So if you get this impulse to the upside, and then you get like small drop and then correction, and that, this is not the corrective structure that we're looking for. We're looking at a corrective structure that will respect the time of the impulse, which means like will respect that this should take more time than the impulsive wave. And if that's the case, the first impulse should be big, logically. Make sense, guys? So again, once you are the recording, you will understand probably better. Now, once you get this down wave, right? We're explaining now the expanding flat scenario. Once you get this drop and you get this corrective structure to the upside, for expanding flat, this correction will go up to break this top. So at this point of the time, once you get this corrective structure that will break the high of this impulse, at this point of the time, you have only two scenarios, running flat or expanding flat. So the expanding flat, you will get this drop that will be going all the way down to break this low and then up again. So the form of the expanding flat is this one. All right, you have this drop, you have this corrective structure that will go all the way up to break this top, and then you get this down wave that will go all the way down to break this low and then all the way up. Again, the first impulse should go between 40 to 60% of this move. All right, why is that? Because if this will be going lower than that, the corrective structure, it will not take more time, and eventually this will be within the impulsive wave, which means like if you get this up move and then a small one correction, then up, the impulsive wave will be here. Small correction up, impulsive wave will be here, and then you will start a bigger corrective structure. Make sense, guys? So what I mean by bigger corrective structure, this corrective structure is bigger than this one. Make sense? So this is the degrees, the fractal ratio of the market. Now, coming back to the expanding flat, this one is very powerful. So the two powerful flats that we usually trade or that you should focus on are the regular flat and the expanding flat. So once you focus on these two flats, you will get high probability chance trades and high probability chance moves. Correct. Now, coming back to here. 1, 2, 3. Let me just make it in this way. I think will be better for you. Let me just go for this. I'm just, guys, making this as the first impulse. As example, you fix this impulsive move and you are expecting the market to go up. All right. Now, the 4 variations again. This impulse, guys, will be the same for all the corrective structures. I will just show you here one thing that will make a lot of sense and it will help you a lot. So you've got this up move, this A high, and then regarding regular flats, you'll get a correction, drop, and then up again. Contracting flat, you'll get a correction, drop, and then up again. This is the same thing here for the running flat, and this is the same thing for the expanding flat. All right. Now, regular flat is this one. I'm just putting these guys edges in red for you to know the pattern. So the red is the pattern lines that we are drawing here. Okay. These are the 4 variations, guys, of the flats. As you can see, the flats are 3 waves corrective structure. Okay. So the most powerful one is, our powerful ones is this one and this one. Why? In this one, we have the liquidity. Liquidity basically, let's call it liquidity zones. And this where market makers usually target retail traders' orders. And then after that, market will be going up. This is the regular flat. It's very important to focus on this one. Try to identify this on your charts and try guys to focus on the interns of it. As example, again, write down this as rule. It's very important. Characteristics of flats is impulsive, corrective, impulsive. So it's 3-wave structure. It will be impulsive, corrective, impulsive. What I mean by that, this is an impulsive move, this is a corrective move, and this is an impulsive move. And other means, like if you see something like this is not a regular flat. Okay, so this should be impulsive, corrective, impulsive in order to consider this as a flat. This is very important, guys. Once you are recording, take note. This one, we do not trade it usually. It's very important to know this for analysis. Why is that? Because if this is an impulse, right? And this is an impulse also. If this is an impulse here, if we'll not trade this one and we get a regular flat here, we can go for this trade to the upside. And that's why it's really important to know, these flats in order to know where you're in the bigger picture and what is the next move. Because remember, the trend is your friend, right? You know that. So you will go for the next trade. If this is an uptrend, you have high, higher low, higher high. If you get a corrective structure without printing a new low, you can go for the next trade here as example to go with the trend, right? Just I'm making this thing clear for you. Running flat also, we do not usually trade it. You can go for it only in one case. If this impulse is big one, like if this impulse is basically going 60% of this move, just as a note, and then you get a corrective structure to break this top, you will not have enough move to make an expanding flat. That's why running flat here will make more sense. Right, guys? I hope like this is clear. So regarding running flats, if this first impulse is going, as example, 60% or 70% of this impulsive wave is retracing, once you get a corrective structure, another drop, you can go for this running flat trade because there is no room for expanding flat scenario. Make sense, guys? Other thing you can do here, if you get this up wave, you have a clear uptrend, you can wait a correction up again. This way you go for the next trade. We'll go into details regarding this one on the strategy class. So the two powerful flats that you should focus on is the regular flat and the expanding flat. Why is that? Both of these ones, guys, they target the liquidity. So in this one, we have liquidity zone. In this one, we have liquidity zone. This will be perfect for going in the direction of what market makers are planning to do. Again, characteristics of all these flats: impulsive, corrective, impulsive, impulsive, corrective, impulsive. Again, impulsive, corrective, impulsive, so on and so forth. Example of an expanding flat. How showing we measure 50. Pisinafi, you can go this for with the fib as example. So if you fib this one from here to here, regarding fibs, guys, we fib starting from the wick to the wick. All right. So if this impulse basically going as example 61, 71, or whatever, between like 40 to 70%, this basically how you measure it. Just you fib in the direction of the impulse, basically. All right, guys. Make sense, Pisinafi? So you use this fib retracement. You start from the lowest point to the highest point in an up move, and the inverse in the down move. And this is how you measure basically 50%, 60%. Make sense, Pisinafi? Before we go to examples regarding expanding flats. I've not used fib before. I'll try. Oh, all right. So in that case, you can watch, guys, probably tutorials regarding TradingView on YouTube, see how to use it, and then you can go for it. If you are using MT4, also you can go for MT4, whatever. But TradingView is basically the most powerful trading charting platform. So if you want to use it, you can go to YouTube and look for probably tutorials regarding this one, how to use fib, how to do this. All right. Now, examples regarding expanding flats. Regarding expansions, guys, you go as example for any of the charts. You will be also looking for. I don't know if we get if I show the example regarding running. Just because we are here, let me show you this. This is a running flat for euro dollar, by the way. We've got this up wave. Yeah, we showed you examples regarding running in pound dollar. This is a running flat. As you can see, it's 3-wave corrective structure. And then this is a regular flat again as 3-wave corrective structure. Right, guys? Now, in terms of expansion or like expanding flats, look at this. We've got this drop. We've got this up wave. We've got this corrective structure. We've got this up and then this drop. So the expansion here is this one. So you get this drop, expanding flat, drop, and then all the way up. So in a downtrend, the expanding flat will look like that. All right. In an uptrend, it will look like this. So can you see this one, guys, here and this example? So you get this drop, up, correction, up, and then this drop. Can you see that, all of you? As a small example, you go to any other chart and you will try to find them. Where do we have expanding here? Where do we have expanding flat? Where do we have regular flat? Can all of you see this regular flat here to the downside? Up, correction, up. For every move up, we'll get another move up. Anything in between is called correction. If we zoom out or like go to weekly as example, any time frame, look at this. Just to explain you by basically the fractal nature of the market, yeah? Look at this. We've got this up wave, we've got this drop, correction, drop, and then all the way up. Can you see this big expanding flat even in the weekly chart? So you will see the fractal nature, you will see the waves over and over again on every single time frame, on every single tradable asset. Can you see that? This was here basically a regular flat because we never broke this high. You've got this drop, correction, drop. Now look at this. Inside this one, this is a regular flat. And inside this regular flat, you have also a correction. Look at the fractal nature of the market. Here you have running flat inside a regular flat before this drop. So can you see, guys, the fractal nature of the market here? So again, for this drop, we've got this drop. For this up move, we've got this up move. For this drop, we've got this drop. how can we confirm the running flat? Great question, Pisinafi. Running flat will be confirmed here. Once you get this upwave and break this top, this way you will confirm the running flat. This is a very good question. So if this is the high, once you get the completion of the corrective structure and then the next impulse, this way you will say, all right, now I have a complete running flat. Make sense? Once you break this high and not this high, because this is inside the corrective structure. Let me just make it clear for you. If this is a running flat, once you get this up move and you break this top, this way you will say, all right, now we have a complete running flat. In other means, if you have a down move here, you can look for sell setups to the downside. If you are expecting market to go higher, you can wait market to correct, go for the next up wave. Make sense? Good question. How about if after the first corrective impulse, the second is another impulse, but still within the flat range? Then complete the flats correction. Can it consider a correction? Johnson, I'm trying to understand your question. What if after the first correction impulse, which means like this one, right? Like this, the first impulse. The second is another impulse. Yeah, great question. If you have sharp down move, sharp up wave, this will be a complex structure, which means you will get a corrective structure up into this one. This is exactly what happened here. And then after that, you will get a drop in relationship to this one and then up in relationship to this one. So which means you'll get correction within a correction and then up again. Make sense? So here in this one, we've got like sharp up, sharp down instead of sharp up, correction up, and then a drop. This is a very good question. This example exactly here in front of you. So you have like sharp up, sharp down, correction, this, and then the drop. All right. So this is a correction within a correction here, and then the drop. Guys, I'm not expecting you to get it straight away. You need to backtest this. I'm not giving you too many examples because I want you to go to the chart and try to figure it out. Make sense? There is a ton of examples everywhere. So I want you to go to the chart, and this was a contracting flat as example here, just to give you more hints now, and then up again. I don't know if you remember, guys, from here we said market will go up, by the way. I think from the early start of our thing. Go to any chart just randomly. Yeah, go to any chart. You will see the flats basically. All right. Look at this. You have this down. Let me just zoom in a bit here just to show you the structure that I want to show you. Look at this. This was an expansion here, and then the drop. Again, we've got this up, correction up, and then the drop, and so on and so forth. We've got this up wave, we've got a three-wave structure up again. All right. This was a regular flat, another push up. This was a running flat here, a running flat downside. So once you start to focus on mapping the market structure, again, I'm not going for top-down analysis. You have to do it, guys. All right. What I mean by top-down analysis, you go to the yearly. As example, if this is an impulsive wave in the daily chart, okay, you mark this as you've in an arrow as example or whatever, and you go to all time frames, you see how this one is subdivided into how many waves. Before you go to prove anything here, just look at it. Like how many waves you can see inside this one. This was the biggest corrective structure. So for me, this is a three-wave structure, up, correction, up. This is smaller. This is smaller. This is the biggest corrective structure. So unless I see a corrective structure similar to this one, I will not call this as 1, 2, 3, 4, 5 as example. Okay. Expanding flat is three-wave structure. So all the flats are three-wave structure. This is the three waves, by the way, of the expanding flat. So you have 1, you have 2, you have 3, and then up in relationship to this one. Make sense? Make sense, guys, regarding the flats? You go, you backtest this, you check it on your charts, and you try to draw them. Great. Now, I'll cover, guys, quickly 2 more patterns for you, and then we end it for today. Okay, so all you have to focus on, like I said, regular flat and expanding flat are the most powerful one. But this regular flat as example, it can turns out to be, instead of three-wave structure, this is a downtrend, by the way. It's a minor downtrend from here to here because you have a low, lower high, lower low. If you get a corrective structure, another drop, we call this as 5 waves corrective structure. This is what we call it, simple, no name, like 5 waves corrective structure, full stop. No double X, no triple X, nothing. This is 5 waves corrective structure because this is your corrective structure from here, as example, to here, and then up again, which means if after a regular flat, I start to get a corrective structure, market will not be going impulsively. I might get another drop. How this will help me? If I'm in the trade, I'll move stops to break even and let market unfold. This means I have now a higher probability chance of getting break even here before I go to the next trade. The bias will not change. It's just like the corrective structure will get extended. This way we say, guys, we might have extended corrective structure. This corrective structure get extended if you hear us on YouTube saying that. Okay, so you will get this down, correction, and then up again. This is not a running flat in the middle. This is basically, this is impulsive, corrective, impulsive, corrective, impulsive. This is the characteristic of it because this is a downtrend. The impulse are in the direction of the trend. This is a minor downtrend. So you have here impulse, you have here impulse, and you have here impulse. Now, a running flat in the middle is this, just to explain you this point. You have this down, sharp up, corrective structure, sharp up, down, and then up. Those of you are a bit confused here. I'm just giving you an example or like the difference between the running flat in the middle and between 5 waves corrective structure. I'm just mapping from here to here and from here to here, right? In this scenario, we have impulse, correction, impulse, correction, impulse. In this scenario, we have impulse, impulse, correction, impulse, impulse, and then up again. Forget about the internals, how many waves you should see here or how many waves you should see here. Focus on this characteristics that we just explained you about the fast and the slow move. All right, guys? And focus on the key points. These are the key points here. Make sense, guys? The difference between running flat in the middle and 5 waves corrective structure. Yes, we'll give that in a moment regarding the ending structures. Got it, perfect. Guys, again, once you listen to the recording, take notes. This session, it's 2-hour session. I was not planning to go far in this one at this like that, but like I said, these explanations are very, very important for you to basically take notes later on and draw them by your hand, okay? Now, also we have 2 other corrective structures. They are triangles. I will not explain them. They are not important. Okay, so triangles are basically also 5 waves corrective structures. Ignore them at the moment. You don't need them. Focus only on the regular flat, expanding flat, and 5 waves corrective structure. All right, guys? Now, also you have something called 333 and 333. These are basic complex structures. Ignore them. Because as example, this was a big complex structure here. Look at this. So if you will not get a simple flat, do not go for the next trade. Like get out and then go for the next setup. This is a complex structure. And also in Aussie New Zealand, we have one, just to give you an example how it will look like without going into too much details, because like I said, I don't want to confuse you with all the details here. Look at this. This is a complex structure. Okay, you had this up wave. So at this point of the time, if I have this up move personally, I've got this drop, correction drop, I will look for buy setup. So I'm expecting this to be the next impulse. So once you get this up, this corrective structure, and then this up, or like at the finish of the corrective structure, guys, you will expect market to go sharply to the upside because you are expecting the next impulse. And remember that, take this as rule and write it as note. Your job is to trade the next impulse. This is weighted waves concept as well, okay? So your job is to trade the next impulse. And we'll dig basically deeper into this one on the strategy class. Anyway, regarding this one again, This was a regular flat at this point of the time. For this up wave, if market will not give me this impulse, this means something else is happening. I will take out the trade, I will get out, and then I'll wait for the next structure, the next setup. Make sense? I'm just giving you guys the names in case you will face this while you are reading or like while you are searching. Ignore them. Take them for knowledge, but ignore them for at the moment. It's not needed. So you have expanding triangles, you have basically contracting triangles. These are corrective structures. They are basically 5 years corrective structures, and you have the complex structures. Ignore them for now. Make sense, guys? So focus on the regular flat, expanding flat, and the 5 waves corrective structure that I just showed you before. If you focus only on these, ignore all the rest, you will see a lot of things clear. Perfect. Now, regarding impulse, guys, after you get this impulse as example, yeah? So we have studied this one, the corrective structure. Now, once this is about to finish and you need to go for the next trade, you have here an uptrend. You get a corrective structure again, same thing here. You will need to see if there is any pattern in this corrective structure and then up again. Now, at this point of the time, if this is the end of the trend, you will get basically here a reversal, and reversal will look like this: drop, correction, drop. Now, I will not explain in details here because this will be covered on the strategy class, but just to give you also a hint, once you start to get a downtrend, this is a sign that we are reversing, okay? What is the difference between reversing and the difference between getting another corrective structure for a continuation? The difference is where are we in the bigger picture, which means if this is the first impulse of a daily potential uptrend, you will not get a reversal. If this is the last impulse of a daily uptrend, you have a high probability chance of getting a reversal. How do we know that this is a reversal or not? If this basically is a complete structure on the daily, and here you have this up, correction, up, correction, up, and you start to get this one, this is a sign of reversal to break this low. Make sense, guys, all of you? So if this is a complete regular flat on the daily chart, you look where you might get sell setup to go for reversals. Remember, the trend is your friend. So looking for reversals or being a trend follower trader is depending on your personality. So as traders, you have only 2 types, either those who go for trend followers and those who trade reversals. And trust me on that, no matter of type of trader you are, a market will make sure to slap on you basically, guys, at least 2 times per year. So no matter what type of trader you are, you will get losses. Okay, so all you have to do is to manage your losses wisely after you learn how to trade correctly. So before I just read the questions, guys, let me just explain the last pattern that I want to show you for today, and then we go for a few questions and we end it for today. We covered this regular flat, expanding flat, whatever flat here, and then the up move. Another corrective structure, another up move. Another corrective structure. Can this be only 5 waves? Yes, like I said, it can be 5, it can be 3, 5, whatever, right? So this is not only 5 waves, and this should reverse, right? This is an uptrend, which means as long as market is printing higher highs and higher lows, we are in an uptrend. Now, impulsive waves, they also have patterns, and the pattern that you should focus on here is the ending structure. What is the ending structure? Is basically, we call it ending diagonal. This ending diagonal, you should focus on the contracting ending diagonal. Okay, so diagonal is an impulsive structure, and you will basically find this at the end of the trend usually. What is the characteristics of this one? You will see this up wave correction. This next up move, it will be smaller than this one. And the third impulsive wave, it will be smaller than the second one. So you have this first, second, third. And this one, we are losing momentum, which means like this wave will be smaller than this one, and this wave will be smaller than this one. Make sense? After that, the market will reverse sharp. You will find the contracting ending diagonals at the end of a structure or the end of a trend. Make sense, guys? So this is an impulsive pattern that you can focus on. We have also leading diagonals. Forget about them. Losing momentum, 100%. Examples straight away into the charts. We have a lot of them. As example, I'll show you just this on gold before we go for probably other examples, but just this one as example. Look at this. Down, correction, down, correction. And this one, this was a contracting flat at this point of the time, or running flat. We double check if this low is taken or not. And look at this. We've got this drop, correction, drop, correction, drop. As most of you can see here, this wave is smaller than this one in terms of price we are talking here. This impulse here is smaller than this one in terms of price. All right, guys, we are measuring here the price. Impulsive waves are related to price. Corrective structures are related to time. Now, after this ending structure, if you need to connect these lines, you will see it like as contracting ending diagonal. This is what we call it. Market will reverse sharp. Make sense? So this contracting ending diagonal, you will find it at the end of structure usually. This trend from here to here is a structure. Okay, guys? So structure is a combination of waves. Corrective structure, impulsive structures, they are combination of waves. Characteristics of them, you know them now. This was an impulsive move. This is not the corrective structure. This is the first impulse of the next corrective structure. You've got this correction, drop, and then up again. This is a contracting flat. So up, correction, all the way up. Can you start to see that, guys? Another example, you can find ending diagonal in this one as example. Look at this. We have this up, correction, and this was the last wave of the regular flat, and then the drop. So look at this. Up, correction, up, correction, up, and then the reversal. Can you see the reversal, how it's sharp? So this wave is smaller than this one, and this one is smaller than this one. So we have this up, correction up, and then the reversal. Guys, make sense, all of you? So we have ending diagonal on gold, contracting ending diagonal on New Zealand dollar, and you have to find the next ones. We have in Euro New Zealand, we have in other pairs as well. Make sense, guys, regarding the patterns, regarding the regular flats? All that you have to do is to try to find these on, like I said, you go yearly all the way down to 1 hour. And then once you start to understand the patterns, the fractal nature of the market and the market structure, like I said, uptrend, downtrend, all this stuff, we can go into more details. But once you understand what I just explained you guys, you will know as example, just to give you example, if I go to dollar CAD, where is it? Dollar CAD. So most of you have seen the chart on TradingView, right? And by the way, guys, once you go to see any chart that we post on TradingView, if you are not following us on TradingView, you do so. And then also you like, right? So you saw the chart regarding dollar CAD, why we are expecting, now you know why we are expecting dollar CAD to push up, take liquidity here because you have equal highs, we have the regular flat, the structure is completed, and my market might go up again. Is that clear for all of you? It's just for you guys to start to understand, sorry, what's behind our forecasts. Yeah. As example, euro dollar. Look at this. If you go to the 4 hours, why do you think we said market will be going down? Because for this drop, we need basically a drop here. And this was basically up, correction up, and then a drop to make running, expanding, or if this is a corrective structure, market will correct for another drop. Make sense? So again, for this one, this was basically the move. So now you know, after you break this top, you will not go for this buy setup anymore, because now you know, all right, for this drop, market has to give us a down wave. And this was the move that market gave us eventually. Make sense, guys? All of you are just, I'm just giving you a few examples for you to start to see and start to know what we are trying to teach you here. And regarding the patterns, if you focus only on the patterns that I shared with you today, everything will be clear in front of all of you. All right, guys? Make sense? So this recording will be available for you tomorrow. Like I said, it will be sent to you at 7 p.m. or if before, we'll let you know. Which what does check the reaction? Right, Douglas, check reaction means like you can start to wait for setups. As example, if market is here and we say check reaction here, means like if you are in this trade, you take profits here. And if you are not in this trade, you wait for sell setups here. Make sense? Just as a fast respond here. Peter, okay, European creating running flat. Probably too. I will not go to analyze the charts, guys, for you here, because you know these are done on like weekly basis. And to not make this recording too long, we see all of you guys on the next session, which will be here. Okay. Again, to let you know, guys, the recording will be sent out to you. These are videos, pre-recorded videos. We will send you these ones on this date, also at 7 p.m. And the next live session will be on 11th of April. After you watch the recording, take notes, try to draw the patterns, guys. It's very, very important, and practice. Okay, guys? Thank you, and speak to you later on.